Overall, we believe that there is a high likelihood of the US going into recession over the next 6 to 8 months. If we take a look at history, 75% of the time when the Fed has hiked rates, the US economy has gone into recession. Now, if we look at the US economy as a whole, it is starting to slow. We're seeing the ISM manufacturing index has been below 50 for a number of months and has recently fallen to 46. We also see at the moment, we see the 10-year yield below the 2-year yield, which is another indicator of a recession on the horizon. We've seen central banks battling against inflation, and they've far from got that inflation under control at the moment. For me, liquidity is key, and that also means avoiding speculative investments. Quality companies which have strong balance sheets have historically outperformed in this type of economic slowdown environment. Other asset classes that could perform well in this environment are emerging market debt and gold. We're seeing inflation starting to fall in emerging markets. Emerging markets hiked earlier and faster than developed markets. And what we expect to see now is we expect to see long-term interest rates in emerging markets start to fall. We've just seen the RBA pause now in July. We believe that the RBA has to increase again in order to get inflation under control. We see an increase in August and then another one before year end, bringing the terminal rate to 4.6%. If you take a look at the Australian economy, we still have very low unemployment. We're seeing house prices rise. In June, we saw retail sales go up. I don't believe there's any option for the RBA going forward but to increase. Well, one area that I really see a pocket of strength is in Australian resources. If we take a look at China at the moment, China is battling to stimulate the economy. And in the past, what they've done to stimulate the economy is build infrastructure. And we all know that infrastructure needs resources and tends to lead to an increase in commodity prices.